So let me give you some more things that are happening right now with this market. I see one of you mentioned that you want this shirt that I'm wearing. Well, we are gonna make some apparel with the Panther on it. We're working on it right now. Actually, we're trying to find places to get it printed at a cost that was fair enough that we could actually make a profit in the business and stuff like that. So that's the hard part. And then just supply chains. It's a real challenge. Like even right now, I can show you we have like literally thousands of these books stacked up like in my basement. And because you guys are, and I appreciate your support, I'm signing all these books, and there's like workbooks and flashcards and all kinds of stuff. So selling stuff and shipping stuff is a whole vibe in itself and a whole operation. So we are working on that. So thank you for asking that question. All right. So with that being said, let me give you a few more things that are happening in the market, and I'll kind of give you some thoughts and tips in terms of some places you could put money. One thing that's really been discussed a lot lately is the bond market. The bond market actually is what many believe was the catalyst that caused Trump to fold his cards a little bit and do the 90-day pause on the tariffs. And this was big. What they watch is they watch like the 10-year yield and the 30-year yield, and they look at the yield curve to see if it's inverting and just how high those short-term rates are getting, things like that. And so what basically happened was that these bond yields got kind of crazy, and nobody knows exactly why it happened, but they know that if the U.S. is taking on a bunch of debt, then one of the vulnerabilities is that they need people that are willing to own this debt and buy this debt. If those people don't buy that debt, if they're not willing to hold those bonds, then we're in trouble. We end up having to pay higher yields in order to sell the bonds, which increases the amount of money the government has to pay in order to service the debt. So one of the US's vulnerabilities, and you should learn from this actually, is that, look, here's the deal. The Chinese are good savers. They save better than the United States. In fact, every country damn near out there saves better than the US. Americans don't save because saving is not part of your culture. And I talk to you guys a lot in my book, The 10 Commandments of Black Economic Power, that economics is culture. Culture is economics. So because we don't have a saving culture in America, we have a debtor's culture. We have a consumer culture and a debtor's culture. So we buy a lot of things from around the world. We're not as eager all the time to sell things. And then also we end up borrowing to a point where other countries have to step in and buy our bonds, which to keep our rates low. If they don't buy those bonds and those bond prices fall, then the yields go up. When the yields go up, that means you're having stress in the bond market. The bond market was the catalyst that caused Trump to actually fold, because that is the sign that your economy is starting to crack. It starts to crack when you're not just losing productivity and you're having employment issues and inflation. Those are all problems as well. It also starts to crack when you lose something that we've talked about a lot in class, which is liquidity. Liquidity matters. The ability to convert things into cash matters. You know what liquidity, liquidity very well. Liquidity is when you need cash and you ain't got it. You got something of value, but you don't have cash. Maybe if you don't have a job, but your bills are coming up, but you got a master's degree, well, that's a liquidity problem. You need to convert your human capital, your time and your energy and your skill into cash, and you got to do it fast in order for you to be able to pay the light bill or to pay the rent or to pay the car note. So what do? You go around and you make deals with people. You give them higher yields. You say, hey, look, normally I would charge you $500 to do this job, but I'll do it for $250 if you can pay me by Tuesday. So what you're basically doing is you're doing what happens in the bond market when there's not a buyer in the bond market.